Hello and welcome to the program. I am BC Adebayo. Coming up today, UK unemployment surges to 4.8% in the third quarter. Egypt loses $14 million in revenues in the fourth quarter of the 2019-2020 fiscal year due to coronavirus pandemic. Plus, Botswanan government sets aside $1.29 billion to reboost the economy. Well, let's get the show started right away with intraday market numbers. Well, the markets we track here in Africa were mixed at the time we got the numbers. The all-share index in Nigeria appears to be sustaining the positive momentum with a 0.39% increase at intraday. Well, it's a different story in South Africa, where the GSE index was down 0.11%, also at intraday. The EGX 30 in Egypt had surged 2.34% at intraday, while the Kenyan Bourse ended Monday's session down 1.11%. Well, it's all green in the Middle East, especially in Dubai, where the index was 2.05% positive at intraday. The Abu Dhabi index was also up 0.52%. In Qatar, the index was 0.37% positive, while the Saudi Tadawul recorded a 1.45% increase, also at intraday. And in Europe, stocks climbed further this morning, continuing to rally on hopes of an effective coronavirus vaccine that has been found. But let's get more from Chelsea Delany, who joins us live from the Frankfurt Stock Exchange now. Chelsea, good afternoon. I can see that the stock market rally has already lost some steam after yesterday's announcement that the drug makers Pfizer and BioNTech are getting closer to a coronavirus vaccine. But what are traders in Frankfurt saying about the significance of this development?
It's a huge step. There's no doubt about that. This is obviously the closest we've gotten to a vaccine. And what we've heard from Pfizer and BioNTech is that they do expect this drug to be submitted to U.S. regulators by the end of the month. So we did see stocks really take off around the world yesterday on that news. The DAX here in Frankfurt was up about 5%. But we've seen that lose, as you said, a little bit of power today. Now the DAX is basically flat. It's been up and down throughout the day, but really no major gains across Europe again for today. And one reason for that is that investors are now looking at this news from Pfizer and BioNTech a little more cautiously. It is still, by any stretch of the imagination, a very positive development. The effectiveness rate that Pfizer and BioNTech are reporting is extremely high, 90%. That's much more effective than, for example, a regular flu vaccine, but there's still a lot of steps that these companies have to take to really get this drug to market. It's the data that they've reported is still preliminary. They need more data before they can submit to regulators. We don't know how long regulators are going to take to approve this drug, and of course there's going to be immense distribution and production challenges after that's all taken place. So there's still a long way forward until there's sort of a return to normality, as some people are hoping for.
But meanwhile, Chelsea, the German government is already laying out its plan for getting this vaccine to the population once it's approved. What is the strategy?
Right. Germany is really setting itself up as one of the first countries to very clearly lay out the plan for what happens once this drug is approved. It will have to be approved by EU regulators as well. But there is hope that we could see these approvals either this month, next month, or by the beginning of January. So it is getting close, hopefully, to being approved and being ready to distribute. Once that happens, Pfizer and BioNTech are going to face a limited supply. They only expect to have about 50 million doses available by the end of this year. That sounds like a lot, but you will generally have to get multiple doses of the drug, of the vaccine, for it to be effective. And as well, we are expecting them to really ramp up production next year, but it's still going to take quite a long time until there is enough of this vaccine to really cover the population. So what the German German government has proposed is really a tiered system where high-risk populations and critical workers would have first access to the drug. So at the top of the list would be people with pre-existing conditions, people who are very vulnerable to the coronavirus vaccine, so the elderly, things like that. After that, the next rung of people who would be available to get the drug would be people working, for example, in hospitals, doctors, nurses, people working in the healthcare field. And then after that, you have people who are working these system-relevant jobs, people whose jobs are very important, who can't really work from home. So something like a police officer, a firefighter, a teacher. And then after that is really the rest of the population. But Germany is really trying to prioritize the people who, A, are most vulnerable to the virus and also who really don't have a choice for society, but to be out there really continuing their work.
Well then, Chelsea, the vaccine couldn't come soon enough for the airline industry. Norwegian Air says on Tuesday that it could run out of money early next year after the government rejected its plea for a bailout. Does this vaccine news give any hope to airlines like Norwegian?
It gives a lot of hope to these airlines, and we've seen this certainly reflected in the stock prices of airlines over the past couple of days since the vaccine trial results were announced. We saw airlines like Lufthansa, the British Airways and IAG really shoot up 20, 30, 40%. So a huge surge in those airlines. But as we've discussed, it's a long rollout period to getting this vaccine to the mass majority of the population. So many of these airlines are going to have to hold on for several more months, if not years, to see a full recovery in the market. And that comes as many of them are already really stretched to the limits. Norwegian Airlines being really the first and foremost in a very difficult situation now. They are today saying that they are getting close to running out of money. They have about 6 months of cash left, but they also have taken down the number of planes that they're using to 6 out of 140. So clearly their business is struggling immensely. But we've seen this from other airlines across Europe as well. Lufthansa has reported major losses. Air France, KLM, all of these airlines that have already gotten a lot of money from governments to bail them out are now looking at potentially several more months of travel disruptions. And even after we do get a vaccine, many analysts, many aviation experts expect that we won't ever really see a full recovery in this market. Many people now are much more cautious about air travel, and we also have seen a big shift in the way people work. So many are now looking at a future with much less corporate travel, much less business travel. So even as we come closer to getting a vaccine, these airlines are really looking at a dramatically different future.
All right, Chelsea, thank you, and we'll see you again tomorrow. And we're still tracking the big story coming from the UK today, and that's talking about the latest unemployment data showing the UK's unemployment rate rose to 4.8% in the third quarter of the year, up from 4.5% as coronavirus continued to hit the jobs markets. Well, data from the Office for National Statistics shows redundancies rose by a record 181,000 in the period to reach a record high of 314,000. But let's get more on this from Juliana Olayinka, who will be reporting from our London studio. Good afternoon, Juliana. I know you spoke about this with Chime this morning, but let's take a closer look at the data showing the government's furlough scheme and the recovering economy failed to prevent record redundancies in the period before tougher lockdown restrictions were imposed. How is everyone reacting to this news?
Well, there isn't much reaction here, and I presume that's because if you look at the figures that you've just nicely been fleshing out, if you compare this internationally and historically, 4.8% isn't that high. I think if you look at Eurozone, I believe unemployment stands by about 8%. Of course, for the thousands, hundreds of thousands of people that have lost their jobs, that isn't a welcoming response. But I presume that's one of the reasons why it's not necessarily dominating headlines. But you're right, for the 3 months to September, I believe it's 310,000 individuals were made redundant. This is the biggest quarterly increase on record, and it does appear that things are only going to get worse. So the increase is 0.3% quarter on quarter. So unemployment currently stands at 4.8%. Last week, the Bank of England, when they were conducting their Monetary Policy Committee meeting, the Bank of England Governor, Andrew Bailey, did suggest that we would see a peak between about 6 to 7% by the end of this year. And by the second quarter of 2021, we will see it increase to about 8% before it dies down again. So there is still a long way to go. The unfortunate thing is it was only last week that Chancellor Rishi Sunak decided to extend the furlough scheme. This is the job retention scheme that has been topping up people's wages, keeping people employed, keeping people on the payroll. It had tapered off to about 60%, and then employers had to start paying national insurance contributions. And if we look at the data, which is between July and September, this is really the period of when that started happening. A lot of employers were concerned. We saw all of those surveys saying that they just didn't think that they could keep people on. And then, alas, the job retention scheme is extended. So it's a really unfortunate sign. And it's sadly, as I was saying, economists are predicting here that things are only going to get worse here in the UK.
And more bad news, Juliana. This time it's coming from the British Retail Consortium saying that footfall is down 75% as England's lockdown takes a toll on retailers. What more can you tell us about this?
Well, there's not much more to say, really, Bissy. We're in a lockdown and the hospitality sector and the retail sector is shut. So I'm pretty surprised that it's just 75%. You'd expect it to be 100% because there is nowhere for any individual to go. I know there are a couple of coffee shops open, but the entire retail sector is completely closed down. So there is no wonder that 75% is the amount of footfall that has been lost. I think what's pretty interesting, actually, about this British Retail Consortium data is the rush that was seen just before the lockdown. So the lockdown, I believe, started on Thursday, the 5th of November, and it was televised in an address to the nation on Saturday. So the data showing how many people rushed out to the stores between Sunday and Wednesday really increased. I believe there was an 8.5% increase in the amount of people attending footfall, attending or going to a lot of retail parks, and if you compared it to the same period last year. So people were desperately keen to get out, get some of their Christmas details ready. So that figure is what a lot of analysts are pointing toward at intraday.
All right, and how are the markets reacting to all of these gloomy data at intraday?
Well, the FTSE is still in positive territory. Of course, they're still reeling off that data that perhaps the beginning of the end is coming for COVID-19. And of course, we did have a little bit of positive data from retail showing that in October, there was a surge in people going to buy Christmas presents, lots of them, and very early. So the FTSE All-Share is up 1%. The FTSE 100 is up 1.05%, and the FTSE 250 is up by 1.01%. In currencies, the pound is also up on the US dollar by 0.60%, up on the euro by 0.73%, and up on the Japanese yen by 0.58%. It's worth picking out some of the top risers. On the FTSE 250, Cityworld is doing really well. Their shares are up by 12%. At intraday, perhaps people are really keen to go back and watch their favourite movies. Tour operator TUI as well, their shares are up 7%. And on the FTSE 100, leading the risers is Rolls-Royce. They're up 15%. And IAG, the owner of British Airways, their shares are up 5% at intraday.
All right, Juliana, just like you said, we really do hope that this is indeed the beginning of the end of COVID. Thank you, and we'll see you again much later. Now, the markets in Asia were mixed today, while airline stocks soared as investors in the region reacted to positive developments overnight on the coronavirus vaccine front. In Japan, the Nikkei 225 rose 0.26%, while the Topix index gained 1.12% to finish its trading day at 1,700.8. Over in South Korea, the Kospi closed 0.23% higher, while Hong Kong's Hang Seng added 0.86% as at its final hour of trading. Mainland Chinese stocks were lower, with the Shanghai Composite down 0.4%, and the Shenzhen Component shed 1.045%. MSCI's broadest index of Asia-Pacific shares outside Japan was slightly higher. We turn our attention to the commodities markets when we return in just a moment. Please stay with us. Welcome back. The breakthrough offered by the coronavirus vaccine found by Pfizer and a Biden win in the U.S. election has lifted optimism of a faster economic recovery of many investors globally. But let's see how this is affecting sentiments at the domestic commodities market with the research analyst at the FDC, Mayowa Ige. Good afternoon, Mayowa. Thank you for joining us on the program. Now, what impact do you expect this vaccine breakthrough to have on global commodity markets and, by extension, the Nigerian economy?
That's NBC. The vaccine is a very welcome news as a spark hope for global economic recovery. But then it's important to note that this vaccine will still not be readily available to a large percentage of the global population in the next 1 year. And also, there's most likely going to be funding gaps and distribution challenges in emerging markets like Nigeria, Brazil, where a sizable amount of commodities are produced. And then, despite the Biden win, with the high valuation of the US dollar and low federal interest rates, we still expect to see a weak US dollar in the medium term. And because the dollar is the benchmark pricing mechanism for most global commodities, what this means will be that commodities will now become less expensive to other currencies. And so we will see an increase in demand for commodities globally, and this will lead to an increase in price of commodities globally. Looking specifically at certain commodities, let's look at oil, for instance. We're going to see an increase in oil prices. We've already started seeing it. But then it's still not going to be as high as it was pre-pandemic, because the pandemic has already had a lasting impact and by changing the way consumers and employers behave. And then looking at precious metals like gold, silver, platinum, we're already seeing and we expected to see a sharp drop in prices. But then this will most likely be a short-term occurrence. Looking specifically at Nigeria, talking about Nigeria specifically, higher oil prices would mean high revenue for us, high foreign exchange earnings for us, and with the weak dollar, which will mean an increase in global commodities, we expect to have higher revenues from our top exporting commodities like cocoa beans, sesame seeds. And with the weak dollar, also looking at our cost of debt, we expect to see a lower cost of debt and imports with the weak US dollar.
All right. Now, according to you guys at the FDC, Nigeria's inflation is expected to jump to 14.5% when the October data is released. Of course, food inflation is projected to go as high as 17.05%. What does this mean for the domestic commodity prices, especially as the festive season is just around the corner?
Well, the inflation we currently see in Nigeria is largely supply side driven, more supply side driven than demand. And when we high supply chain distributions, lingering supply chain distributions, high logistics costs, forex rationing have been factors that have driven inflation in the past few months. And these factors are most likely not going to be resolved before the end of the year. And with this, based on this, we expect that prices will most likely keep increasing as the festive season approaches. However, this increase in price will most likely be lessened by low demand, as there's been a drop in disposable income generally in the country.
But apart from domestic inflation, border closure and import restrictions have had an impact on the price of rice in the local markets. We see a bag of 50 kg now selling above 31,000 naira. Of course, this is a commodity whose demand peaks during the Christmas season. So what are your expectations for the price of rice in December?
Rice is a staple during festive seasons. So we expect that the price will continue to trend upwards like other commodities. And then the reduction in supply, which was caused by the floods in Kebbi, which wiped out like 25% of our expected harvest this year, will most likely support this price trend. And then if you look at the demand side too, we would probably see less demand of rice too, because we still have social distancing measures in place in the country, and this would largely reduce the amount of activities we have during this festive season. And so this would reduce the demand of rice that we would see in this in the festive season this year. It will most likely not be as high as it was in previous years.
Thanks, Mayowa Ige, research analyst at the FDC. Thank you for your input on the program. In other news now, the Egyptian government has lost $14 million or 220 billion Egyptian pounds in revenues in the fourth quarter of the 2019-2020 fiscal year due to the coronavirus pandemic. Finance Minister Mohammed Maid says until the end of June, the country spent up to $4 billion out of a $6 billion financial package earmarked earlier this year for fighting the coronavirus outbreak. The minister stresses that the Egyptian economy is preparing for a second possible wave of the virus, adding that the president has called for allocating new funds to the country's new budget in preparation for this anticipated second wave. Egypt targets cutting the public budget deficit to 7.5% in the current fiscal year, compared to 7.9% in the last year. But the government is also predicting a growth rate of 3.3% in the current fiscal year's GDP. And in Botswana, the government has set aside $1.2 billion for the implementation of the Economic Recovery and Transformation Plan aimed at rebooting the economy and cushioning it from the effects of COVID-19. And that's according to the country's president, Dr. Mugwetsi Masisi, during his presentation of the 2020 State of the Nation address in Parliament. The president says the government is looking at several options to finance the additional expenditure, with a preference for domestic borrowing and additional revenue mobilization. The government has also set up an industry support fund of over $116 million aimed at supporting local businesses. In time, the economy is expected to rebound at 7.7% in 2021, following a contraction of 8.9% this year, mainly due to challenges emanating from the COVID-19 pandemic. The African Development Bank has developed a 3-year project in response to demands by member countries for technical assistance to monitor revenues generated from the extractive industries. According to the AFDB, the financial modeling project in the extractive sector will be implemented in 8 transitional countries. That's Guinea, Liberia, Mali, Madagascar, Niger, Sierra Leone, South Sudan, and Zimbabwe from 2020 to 2022. Now, the project is aimed at enhancing the abilities of the focal countries to improve domestic resource mobilization from the extractive sectors. 20 government officials in each beneficiary member country will participate in the training, learning, and knowledge activities as national beneficiaries. And that's our program today. Thank you for watching. I am Bisi Adebayo.